Hello, everyone. This is Allie Wolf, the Chief Economist with Zonda, here to give you your February jobs update. Now, we resumed being in growth mode in January, but February's data only reinforced that. We added 379,000 jobs, bringing the headline unemployment rate down to 6.2%. This now leaves the economy 9.5 million jobs shy of where we were last year. Now, as we look ahead, we believe that March's report is going to be very, very positive. We should be gearing up for pretty consecutive, strong labor reads over the next coming months because of what we're seeing with COVID. So the first thing is that we know COVID cases are down, hospitalizations are down, economies are opening back up. That should encourage a lot of hiring. At the same time, the February jobs report was actually pulled down because of the extreme weather we saw, not only in Texas, but some other southern states as well. So we feel very positive that we're going to continue to see some good reads in the coming months. Now, permanent job losers. We haven't talked about that in a while because they've really flattened out. So they're now still at 3.5 million. Awful for the individuals that are impacted, but of course there was fear that it was going to go closer to numbers that we saw during last cycle, not seeing that at least as of late. When we look at the data, I think one of the most unfortunate things is how many people are now long-term unemployed. And so back when all of this started, of course, no one was long-term unemployed, but the data is now showing that 4.1 million people lost their jobs at the beginning of the pandemic last year and have not been able to regain employment. That's actually about 42% of everyone who is unemployed right now is long-term. And this is what Washington is paying attention to, that these individuals have already maxed out what they're able to get in normal state unemployment insurance, which is why we're seeing such a push on Washington for additional stimulus. Again, we're not here to totally back the $1.9 trillion deal. A lot of you have seen our math that we think the actual number may be a little bit lower of what the economy actually needs. But there has been talks that the extension to unemployment insurance will now get extended through September. So those that are unemployed don't have to worry about not being able to pay their mortgage, not being able to pay their rent, pay their credit card bills, etc. So what I saw at least this morning is it went from about $400 extra every single month from the federal side to now $300 extra, but extended that out 1 month further. As we look at this data, I think what this report really captures is the revitalization of the bottom half of the K. And we've been talking about this in our presentations that hopefully when the economy opens back up, a lot of those leisure and hospitality jobs that were lost, those represent about 40% of all of the jobs that are still, people that are still unemployed. Those are likely to come back quicker. And we saw that directly in this report. You could almost say leisure and hospitality is the only reason this report was so good. So 335,000 of the 379,000 jobs came from leisure and hospitality. When you look further into that, that is 286,000 that came directly from food and drinking places. So you're seeing as the economy opens back up, this is really important to get a lot of those people back to work. Now, in terms of housing demand, a lot of the jobs that were created, I guess crawling back from the jobs that we had lost, are unlikely to impact housing demand, except for the second order effect, which is now you continue to watch the 10-year treasury, you continue to look at investors and how they're looking at future growth. They're feeling very enthusiastic. That's driving up the 10-year treasury, and we're finally starting to see the 30-year fixed rate mortgage start to move in line. So we do think there is risk to the upside on mortgage rates, and that could impact some buyers on the margin. That's it for now. If you want to learn more, please go to zondahome.com. Thank you.